Hey traders, Raghee here, and in this recap video we're going to cover the clearing range. Now this is something that I've covered in a number of recap videos, and I'm going to continue to do this because I think it's very important to see that we're not doing this clearing range trade selectively. It is something that I do every single morning. In fact, it's probably one of my favorite trades. So let's talk about one concept that I think, a couple things. I discussed it in a podcast I guess a couple weeks ago, and that is, first of all, the beginning of whatever, the beginning of something, whatever the market is easier to trade, for sure. The beginning of something is easier to trade. The end, the close, is far more difficult. So let's talk about what that means. End of day, end of week, end of month, end of quarter, right? End of year. These are far more difficult to trade. The open is probably my favorite beginning. And when we talk about the open is actually far less factor in more markets than ever. The open psychology is increasingly rarer. Okay, it's rarer. What do I mean by that? The open psychology mostly pertains to any market that has this sudden open and typically, and again, a sudden close. I mean, nothing is far more a really exaggerated example of that than the equities markets and equity futures. So sure, ES, NQ, YM, RTY, Nikkei, DAX, these trade throughout the day and pretty in a pretty liquid way, even in the after hours of those Globex hours, but nothing is like the participation, the volume that we see on the open, 9:30 Eastern to 4 p.m., right, which is the close. So that's the psychology. The beginning of something is easier to trade. So I like the beginning that is that 9:30 to 10. Every single morning, gang, and this is happening automatically now. So the trade is not automated, but the setup is automated. So for those of you that might be seeing the clearing range trade flag for the first day, we make this available free to members. And by the way, even if you're not using Thinkorswim and you're not using this clearing range indicator or setup, you can do it manually. All you need to do is mark the resistance and the support that occurs between 9:30 and 10. Now, here's the factor. This area here cannot exceed the hourly price movement range number of pips. It cannot exceed that, because if it does, the trade is no longer valid. So the only exception to this, and I won't say exception, it's a filter, is if that range is so wide that it exceeds the hourly price movement range for the ES, NQ, YM, RTY, etc., then you cannot take the momentum trade that happens if and when we break higher or lower. Okay, higher. So that I'm not going to expect. The higher or lower trade I won't expect if this range is quote unquote too wide. All right. So the clearing range breakdown, here's some more nuance to this, is only good for the 30 minutes after the clearing is done. So it's really two 30-minute chunks. One is 9:30 to 10. The other is 10 to 10:30. So the trade must trigger before 10:30. To me, that clearing range psychology is really only pertinent and intensely affecting price action until 10 a.m. Eastern. So you've got 30 minutes before this trade basically is really no longer valid, and we move on to asking, well, what's going on with the underlying market trend? Which, by the way, by 10:45 it's a short, by 11:15 it's a short. So the whole day was a short sell, but it started with this right there, which was signaled with the automatic clearing range tool that we use on Thinkorswim. But again, you can replicate this across anything. So every morning, that's what we look at. Now, today just happened to be terrific follow-through. Is every day going to work out like this? No way. But we never know. So that's where it is very important to keep an eye on all these red grab candles, on all these green propulsion dots here. You know, these are showing me that the momentum the organization, the market's gas pedal, is still very much to the downside. So when these propulsion dots occur at the top of the range, it's a short. When they start to occur at the bottom end of the, well, I should say the bottom end of the candles, right? If they're below the candles, that's support. If they're above the candles, imagine that as pressure, as resistance on the market. So in the premium video, we'll start to get into a little bit more of the management here, because today just kept right on going and going and going until it didn't. And I'll talk about how we use the grab candles and the propulsion dots, as well as the wave itself, to manage a trade like this, to manage a day like today. And then, we're going right into the Asian session. It's worth mentioning that we're still below the middle line of the volume weighted average price, which tells me there's still some lingering resistance here, despite the fact that we rallied up. Going into the Asian session, we really need to find ourselves above that middle line of the volume weighted average price to see some follow through to the upside. All right, so that's how we traded the morning across NASDAQ, across S&P, Dow, Russell, and that's how we do it every single morning. I'll be doing this live tomorrow with you all, and Wednesday. So tomorrow and Wednesday we'll have the opening session that I'll be walking you all through, and we'll be doing this again tomorrow so you can see how it works in a live market.